welcome back to another episode of Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP Invest. And today I have for you a very special presentation. Today I want to show you or walk you through the analysis of Cochin Shipyard. Now, all of us know about Cochin Shipyard because it's a very bullish company and it has given really attractive returns for investors. However, if you're a swing trader like me, Cochin Shipyard also offers a lot of opportunities for swing trading. In this video, I am going to take you through step-by-step analysis of Cochin Shipyard, the way I have done in order to participate in a swing trade opportunity, which has allowed me to already earn attractive returns, not just for myself, but also for my clients. And I'm going to show you how to do that using a multi-time frame analysis. So let's go and take a look at the charts. So right above here, you can look at you're seeing the daily time frame. Now, for the sake of this analysis, we will be taking a multi-time frame approach. These are the time frames that I like to follow. The largest time frame that I follow is the 5-week time frame, then 1 week, daily, 75, 15, and 3-minute time frame. Now, if you're wondering why so many different time frames, the first thing is that it helps me get a nice eclipsing view. Basically, if you notice, all the time frames get shorter or smaller by a factor of 5. So 5 weeks divided by 5 is 1 week. 1 week divided by 5 is 1 day candle. 1 day candle divided by 5 is 75 minutes. Divided by 5 is 15 minutes. Divided by 5 is 3 minutes. So I want to get a very uniform fractal view of the market, because fractals is how the market unfolds at the end of the day. If you find any other factor that works for you, if you want to work with a smaller time frame, smaller number of time frames, that's totally up to you. This is what I prefer to do. So my analysis usually for any stock begins with the largest time frame, that is the 5-week time frame. Now here what I can see is the reason why I want to start with the largest time frame is I just want to start with assessing the largest unfolding trend. So what I'm seeing here is that super bullishness is unfolding, and what the volume suggests is that a strong uptrend is unfolding with strong volumes as well. Right, going one time frame lower, and I can see on the weekly time frame also this analysis is pretty well observant. Let's remove any drawings that is there. Now over here on the weekly time frame, what does the RSI tell me? So all the charts have just one indicator, that is RSI, and the other indicator is the indicator plotted using MACD, because it just makes the fluctuations in volume a lot more prominent for us to pick up on. Remember, the exact level of the volume doesn't matter, but how the volume has changed, that matters a lot for us. So that is what you're seeing over here. Now in Cochin Shipyard, the weekly time frames RSI, because it is spending so much time above the level of 70 or 60, it tells us that the underlying trend is very bullish. And if you take a closer look at the volume is catching up every time the price is moving higher, which is great for us. On the daily time frame also we get a pretty similar sense. So now what I want to do is go back on the weekly time frame and I want to start drawing my trend lines. And how will I draw my trend lines? I like to use the cloning method, which means I'm going to first draw my maiden trend line using the most prominent peaks or bottoms that I can see on the chart. So I have chosen these two bottoms because I think they stand out the most. And now I'm going to clone my original trend line, which I like to call the maiden trend line, and then clone that all the way up. So this gives me an idea that there has currently just now been a breakout in the market. Now taking one step lower, and we drew 4 lines, and these are the exact 4 lines that we drew. So these are the trend lines, and it's very important to keep this button turned on. There are 2 options here, globally or simply within layout. I prefer to keep either one depending upon my preference, but it's very important to have it on, especially if you're using a multi-layout chart system like me. Taking a look at the latest volume, what I can see is that even as the trend continues to unfold, the volume is picking up really strongly. And on the daily time frame, if you use this measuring tool, every upside, if you measure, you can see the stock has a tendency to move up very strongly. Let's do a profile analysis here. So Cochin Shipyard is in farm machinery, trucks and construction, a sector which is expected to expand massively. Taking a look at the market cap, it's only 329 billion INR in market cap, which means it's barely a mid-cap stock. That is why this amazingly volatile and massive movements that we see. Smaller companies have a tendency of moving really big. Fundamentally, I did some research on the company. It's a really good company with superb prospects, and that is already starting to show up here. My monitor seems to be having hiccups today. All right, that's fine. All right, coming back to our analysis. The volume looks good. The RSI of the weekly and the daily time frame looks superb. The wave structure suggests that a strong uptrend is unfolding and is expected to continue to unfold in the foreseeable future. So the next question is, how should we execute? The best moment to capture the stock is when the RSI comes down to retest when the daily RSI comes a little bit lower to maybe the level of 50 or the level of 40. as long as the underlying bull trend remains consistent, that is where we can capture. So if I were looking for a fresh entry, I would set up an alert at the level of 40 on the daily time frame, but that is not it. I would set up few more alerts. For that, we'll go down to the lower time frame. Now the 75-minute time frame gives us a much closer look, and if you again use a measuring tool to measure the kind of movement that the stock gives every time the RSI touches the level of 60 and then peaks out before giving a correction, you can see the kind of moves it gives. So taking a very random phenomena of RSI crossing below the level of 30 and then going, like creating a peak, roughly if I calculate that is 115% in just 102 days, which is 100 multi-bagger return in just 3 months. Next time it created a bottom and then rallied. So right now it's already moved up 81%. If you do the same calculation, the last time it touched the level of 30 over here and then take a measurement, 150. So since May 2003, in a matter of just 1 year, less than a year, the stock has gone up 5x, and the trend only seems to be getting stronger as it continues to unfold. So how do you trade this as a swing trader? I'll show you. So as a swing trader, I would predominantly like to use the 75-minute and the 15-minute time frame after I have established that the daily and the weekly time frame are suggesting there is a very strong trend unfolding. For that, like I said, I would use the RSI and the volume indicators. The volume, not the raw volume, but the MACD volume. Why? Because as I said, MACD volume makes the changes in volume very, very pronounced. So on the 75-minute time frame, this is the setting with which you want to operate. Fast length 100, slow length 500, signal smoothing 9. So on the 75-minute time frame and on the 15-minute time frame, I would set up alerts at the level of 30. And every time the stocks come down to that level is when I would start purchasing the stock. So recently, I bought the stock for my account management clients, basically clients for whom I manage accounts. I bought this stock, 10% of their portfolio in this stock, somewhere around the level of. Now, usually I wouldn't buy such a huge chunk of the portfolio in a mid-cap stock or a closer to a small cap stock. I made an exception for this stock because, this is a small cap stock, by the way, not a mid cap stock. I made an exception for the stock precisely because of its quality. The company is exceptional. The strength of the chart is phenomenal, and this definitely calls for taking a little bit of a risk. So this is where we entered when this stock gave a gap down. It's very unusual for the stock to give a gap down, and when it does, it's a good idea to take an entry. So this is where we entered on the 15th of April, and we continue to hold this stock. Within 9 days, we've captured around 23%, and I'm not done holding the stock yet, because if you notice the volume activity, you will clearly see that as the price continues to go up, the volume is getting a lot stronger. The volume only started dipping when the price stopped to go up, which means that it is a possibility stock might take a little bit of a dip, but I am expecting more upside to unfold here. So we are going to continue to hold this stock. So what is the next thing for me here? Now, having established that the stock is experiencing a strong underlying bull trend, having made an entry based on the 15-minute and 75-minute analysis, the next action for me is to keep revising my stop loss, because next, the only thing left for me to do is exit this position and book my profits. At what point do I do that? See, whenever you want to exit a stock, make sure that you have compelling reason to do that. I once read a quote that stay with the trend until you get definitive proof of its reversal. Now, because I am not trading on like the daily time frame, I am not interested in holding a stock for a big correction, like a 30% downside. Because remember, when a stock is giving you an upside of 100% in 90 days, it is also just as likely to give you a sharp downside if you make a wrong entry. Right? If you buy the stock out of the fear of missing out, or if you buy the stock after the rally, or you're buying the stock because someone told you without it being backed by strong analysis, there's a pretty good chance that you're going to buy the stock at the wrong time. It's totally okay to buy a strong stock in a dip or buy a stock after correction if you have reasons to believe it is going to reverse, but it's absolutely capital punishment for you to buy a stock after it has rallied. Now, because I don't want to subject myself to a massive correction, which is probable, which can unfold on a daily time frames wavelength, I would like to maintain revised stop losses here. Now, given that the stock is in a strong uptrend, and here itself, it has moved up 10% in a matter of just 7 bars, what I would do is I would take the most recent peak here and maintain that as a trailing stop loss. And at the same time, I would maintain an alert at the level of 1323, which is the most recent peak in the stock. As soon as this resistance, which is the recent peak created, gets crossed, I will move my stop loss up to the level of 1258, because that becomes my most recent support. But until that happens, I will keep this kind of this consolidation range out of which the stock broke out with pretty strong increasing volumes, this is where my support is, and that's why my stop loss is slightly below that, because I don't want to compromise a lot of my profit, which means from the peak price, I am after all compromising 8%, which is again a pretty big number for my swing trade. But given the personality of the stock, that kind bit of a risk is also warranted because the upside is very attractive. Overall, the risk reward ratio here is super attractive. Now, another thing about the risk reward ratio here is that given the way the stock has unfolded, the strength with which the stock is unfolding, all our trend line supports or resistances have been breached. So we don't really have a number on the target that we can assess on the basis of this chart. But the momentum in the stock is so strong that I am okay proceeding with this. That being said, the only reason why I also entered the stock over here was my risk was very small at the time, which means my stop loss in the stock when I entered somewhere around here, my stop loss was barely 6%. So this is where I had set my stop loss. And because this is a part of my watch list and I had my alerts set in already, when the alert triggered, my reaction window was very small. Why? Because my analysis was already done. So if you want to learn swing trading, I am starting a bootcamp from May 1st, where I will be teaching you my process of creating a watch list, identifying opportunities, doing your analysis, planning your entries, and hitting the hammer when the moment is right. How to use alerts, how to use tracking sheets to make sure that you don't miss out on these key opportunities or key decision-making windows when they present themselves. You need to be prepared. Preparation is the key. So if you want to know more about that, I'm going to do something for you. I am sharing my Telegram channel's link with you in the comments right now. So if you are a user of Telegram, all you need to do is search Trade with Kavita and my channel will pop up. Now remember, there are lots of fake channels running with very similar names, as you can see, but be sure to join the correct channel. It has around 5 subscribers currently. And in this, you will see information about my upcoming bootcamp. You just need to scroll up. It's right here. Visit the link expinvest.in/learn, and over there you'll get all the information about the bootcamp that you need. The bootcamp is called Advanced Swing Trade Training Program. Right? All right. So in addition to my Telegram channel, I also want to walk you through the stock request sheet. Now, if you are here and if you want me to respond to you and answer your questions, your stock queries, what is the stop loss target, basically do the same analysis that I've shown you on Cochin Shipyard, then you want to hop over to my stock request form. Just open expinvest.in/stock request and fill up the form. Now that my analysis of Cochin Shipyard is done, I am going to move forward with your stock requests and we are going to start answering the questions for you. So let's get started with the very first request of the day. We have so far helped around 120 people using this form, and today I'm going to add around 10 more people to that same list. Now, even once you've added your stock requests here, even if I don't make it to your specific request in the same session, don't worry. As and when I get to your stock requests in the next session, my response analysis and the link of the session will be sent to you by my team so that you have thorough analysis of your request. Now, we are going to start with Mr. Satyanarayan's request for L. So let's start with a large time frame. I see a downtrend unfolding with pretty strong volumes, some green candles, but the volume has been quite disappointing. Over here, the recent low has been breached. If you can see this right here. So this low was breached and it was breached with very high volume. For some reason, this line again did not show up, surprisingly. No worries, we'll draw it again. So this was the support, but looks like the support has been breached, which makes me very uncomfortable. And this basically is not a good sign. I would expect the stock to continue to decline. So current price movement and future target for the stock. So my target is actually a lower price. I'm not expecting a turnaround from here. So if you are holding the stock, I would expect it to continue to take resistance as rupees, and I would suggest you to exit the stock right away. Moving on to Paytm, what could be my potential stop loss? Your cost price is 405. You're looking at this for Mr. So let's hop over to Paytm. 405. So you've not bought this very long ago, but you are definitely in some loss. I don't usually like to buy troubled stocks like Paytm, and I strongly recommend against that. As you can see, I had some trend lines drawn. This stock did give a bit of a pullback in some time between November 22 to October 23, but that didn't sustain. Basically, that was more than a pullback. It was a throwback where the downtrend, which has been haunting the stock since its IPO, basically continued. So there was a 70% downtrend, and we can see that the stock has done like almost a 70% downtrend since in the new leg as well. Over here, I can see the volume with which it fell on 29th of January 24 was extremely high. Let's go down to the daily time frame, and what do I see here? The volume activity is not very clear. So I wouldn't say that the stock is outright bearish, but I also wouldn't say that the stock is outright bullish. So when you want to trade in the market, there are three things that you might want to look out for, but there is only one thing that you want to act on. So the three things that you want to look out for, which, and the stock will most likely belong to one of these three categories. Is the stock bullish? Is the stock bearish? Or is the stock neutral? The stock can do any of these three things. But when you want to take action in the stock, you want to make sure that the stock is looking definitely bullish. That's the only time where you want to commit your capital. So basically 33%, at least 33% of what you analyze is going to go to waste, or is going to be a non-actionable analysis for you, which is actually a pretty big number. I would say technically only 10% of what you analyze should be actionable advice, actionable analysis for you. So Paytm at this point of time is neither bullish nor bearish, so it's a no action at this point. And since your holding is not at a lot of loss, I would suggest you get out of this, because there are lots of other opportunities in the market which do look bullish right now. That is where you want to invest your capital. Angel 1 for Mr. Aman Kumar. I like this stock, and the reason why I like this stock is I'm currently very bullish on the stock, and it is also part of my active recommendations to my Trade Together program members. So my Trade Together program is a subscription-based service where I give swing trade recommendations to those who are interested in swing trading with me. So in order to analyze this, let's quickly start with drawing our maiden trend line. So this looks like a pretty perfect maiden trend line with multiple touch points. We've drawn the resistance. This has been a pretty good trend, and we see this point is where I believe a new bull trend has started in the stock. And if we go to the 75-minute time frame, and if we study this new uptrend, what we can see is that the volume picked up when the prices started to go up, and that has been the trend, that when the price does go up, see right now it's a very new uptrend, so the volume is picking up at the other end of the bull trend, but the volume is definitely dipping on the downside, with an exception here, but the opening was pretty strong, so we can expect, we can say that some upside activity did happen here. However, the volume continued to increase. That being said, the stock has started making higher highs and higher lows, and here was an important support zone which the stock has respected, which means you need to set a stop loss right below the support zone at the level of 2630. That would be a stop loss. To be a little bit safer, move it a little bit lower to 2. With that stop loss, you can hold on to the stock for a target at the level of right at this trend line for the time being, or actually just make it coincide with this previous peak at the level of 3450. Let's set that properly. A little bit of an OCD. There you go, 3450. So that is your stop loss. Now let's quickly check the risk reward ratio. The risk right here is around 7.5%, and the upside is around 22%. So it just makes the cut of having the risk reward ratio of 3. Let's take a quick look at your entry price 280. So it looks like you made the entry a little bit higher. My clients got the recommendation at the level of around 2705 just when the stock bottomed out, because I knew that the stock was seeking strong support at this important zone. So my stop loss essentially was nothing. My stop loss was less than 2% at the time, and my target on the other hand was almost 30%. Right, very attractive setup. So now we continue to hold the first target. The first stop loss revision hasn't happened. We are waiting to cross the level above 2954, and that is when we are going to revise the stop loss. But for you, Angel 1 is definitely a hold, as long as you use the stop loss and target. Now let's take a look at LNT for chart, and I'm going to clear out the charts. LNT obviously has been a superb move, but a stock being a superb mover is not a guarantee it's going to continue to be a superb mover. And the reason I say that for LNT is written all over its weekly time frame. Number one, there is RSI negative divergence, which suggests that the momentum is unfolding with less and less power. Loss of momentum in the uptrend is the first sign of a potential reversal. So this stock was very bullish, but now it's turning less and less bullish as the weeks go by. Second evidence of weakness is volume. The very last leg of upside that we've seen, we can see that the volume has not been as strong as we would like it to be, which suggests to us that the trend may not have as much steam as it was operating with previously. That being said, your cost price is 3600, so you bought it probably very recently. And on the daily time frame, what we just noticed about the negative divergence is actually a lot more pronounced. So I wouldn't say that LNT is bearish right now, but I wouldn't also say that it is very bullish and worthy of fresh entry at this point. See, any stock needs to take a breather once it's delivered massive upsides, and L&T is not an exception to that rule. It has been rallying really strongly since March 2020. It's gone up nearly 5x, which is a big deal for a gigantic stock like L&T. So it's very natural that it's losing momentum and is pining for a bit of a correction here. What I would suggest you to do is please set up a stop loss, and the ideal stop loss for you would be around the level of 3576. Now 3576, it's a pretty small stop loss. It's just 2% stop loss. If you have a bigger appetite for risk, you can also go for the stop loss of this most recent low. Basically over here you can see the stock took support here. This is a more relevant level for you to actually set up the stop loss. So this is where I'm going to suggest you to set your stop loss. 3458 is a very good level for you to set up your stop loss. And as for the target, if your position is short term especially, I would suggest you to book your target if the stock retests your current high of 3853, because remember on the daily time frame we are already seeing a negative divergence, and even the 75-minute time frame has started to showcase what I call a negative range shift. Yes, I would definitely call this a negative range shift. These are very early signs of a reversal, and it's already started to creep in on L&T, so you want to be careful. Moving on. Now, before we move on to Albert, I'd like to take a look at the live comments from our attendees. So let me quickly switch my windows. So Akash wants to know how he can get advice from me regarding his career and portfolio growth. Very simple, Akash. Just hop over to my Telegram channel, and right after the session, I'm going to share the link with you. In fact, why not do it right now? So for your portfolio growth, book a call with me or my team by going to the link exp-invest.in/booking, and that's it. That's all you need to do. So the first step for you would be to join my Telegram channel. Please suggest on GSPL for short term. Ronak, you're requested to kindly fill the stock request form. The link is on your screen already. So right now, Engine is not a very good time to buy Cochin Shipyard. The analysis was not meant as a recommendation. That was a pure share of knowledge. I hope that was evident from the detailed analysis that I showed you. So Mr. Desai, you're requested to kindly fill up the form. We have a system that we like to follow. So Mr. Raj is asking, am I providing any premium services for swing trading? Yes, I am providing premium services. It's called Trade Together program. For more information, please join my Telegram channel. I'll be sharing more information over there. Atik, yes, the 75-minute candle is a premium feature. I am using the premium version of the trading view, and if you want to use a 75-minute time frame, that is what you too will need to use. And I think it's totally okay to make a little bit of investment for your tools, especially where your return can potentially be exponential. If you have any follow-on questions, feel free to drop them in the comments, and I will take it up as we get done with the analysis for our members here. So next is VDL. This is my forever favorite stock. I'm going to quickly remove the drawings, and I want to show the analysis. So this is another fantastic stock for long-term investing and short-term investing. It is again one of those stocks which keep giving and giving. I have been swing trading in VBL for over a year, and this is actually my second best performing swing trading candidate. So as you can see, it's perfect. It's steeper than a 45-degree line, which is very rare. The stock has the most the stock has ever corrected is shockingly 43% approximately over a period of barely 2 months, and this was back in 2020, the COVID crash. Since the COVID crash itself, it has gone up 12x, and it just seems to be getting stronger and stronger. I use every dip in the stock as a buying opportunity, and every peak in the stock or every massive upside in the stock as an exit opportunity. So every time I get into the stock, I make anywhere between 20 to 30% returns in a matter of less than a month. So it's a fantastic stock for swing trading. Right now, I think this stock has created a pretty nice base formation, and it has been in strong range bound consolidation since it created the peak on 26th of February, which is where I exited my last trade. And since then, every time the stock comes below the level of around 1375, I have been accumulating the stock. Right now, my strategy is to set the stop loss, and this is also what I'd suggest for you. Just set your stop loss here at the level of 1343, basically right below this consolidation zone, and continue to hold. I expect the stock to continue to rally and to give you a pretty good return. So even if you look at the volume profile, the volume is picking up strongly every time the stock goes up. So my expectation is that it's going to soon break out above it and create new high. Very hard to say where the new high would be, but I will just look out for the stock to give like a very sharp movement in a very small period of time and keep trailing that sharp movement, because from that sharp movement comes a little bit of correction, which is my opportunity to re-enter the stock. So hard to give a target for you, but I have mentioned the stop loss and I hope you will follow that stop loss. Now for Sharan, let's take a look at National Aluminum at the level of 185. Let's remove my existing drawings and let's analyze the stock. So National Aluminum, the unfolding trend is pretty solid here. And let's see, I think these two peaks do a lot of justice to the stock, and I am absolutely correct because the bottoms exactly coincide with this. So that's pretty good channel to follow, and we can see that the stock has given strong, should I call it strong? I wouldn't call it strong. I would say it has given a breakout, because ever since this trend line got tested, the volume has not been picking up quite that much. So National Aluminum is another stock that I frequently swing trade in, but currently I have ousted it from my active list because this last rally that you've been noticing, if you notice this last rally, the volume has not been that impressive. In fact, even in the previous rally, if you look at the volume activity, stopped catching up or picking up in the very last leg of the upside. This is usually a sign that the stock may be topping out. And what I have noticed in my experience is that stocks which are in the process of topping out, the last leg of the rally can be very difficult to capture. It's high risk, low reward. So even if it on paper, even if it looks like it has 30% upside, there will be cases when it gives good returns. But if you keep in practice, if you practice the habit of dealing with unnecessary risk, you're not going to be lucky every single time. So I prefer to dabble in high reward, low risk scenarios. National Aluminum, in my opinion, is not that. But you're saying your average cost is too. So you bought it at the end of the rally, and the 75-minute time frame is not happy or does not support your participation, because there is a massive negative divergence and terrible volume activity, strongly urging you to take an exit. So my recommendation to you would be book out whatever little profit you have and get out of National Aluminum for the time being. At least this is a very short-term analysis, by the way. Take a look at another stock, which is Capacite Infra Pro. Never heard of this, first time analysis. So we'll start with the largest time frame, the weekly time frame, and get started with drawing our maiden trend line here and clone that there. Now, based on this maiden trend line, I can draw a lot of other lines. It looks like the stock has unfolded into a pretty strong uptrend, which is only getting stronger and stronger because the volume is picking up quite well. The daily time frame suggests strong activity. I am noticing RSI in the bullish trend, and I would expect this rally to continue. My target for you, now luckily I am able to give you a target here. My target, immediate target in the stock is the level of 380 rupees, coinciding right here with the trend line. And yes, I would expect the price activity to continue on the upside because the volume is pretty strong every time we see a upward spurt in the price. So that's what I would suggest. And in order to give you a stop loss, this is the closest or the smallest stop loss that I would suggest, because you need to give the stock a lot of breathing room. So this 11%, now I know it's a pretty big stop loss for short term, but unfortunately I can't give you a smaller stop loss than that. So 281 is where your stop loss should be, and your target should be 3. Now that being said, I wouldn't recommend anyone to make any fresh entries in this stock right now because it is a little bit overheated. Now, however, if the stock does correct and the RSI of the 75-minute time frame touches the level of 30, that is where I think a good entry opportunity would present itself. Why? Because within this bull trend, every time if we see within this leg, after touching the level of or here, for instance, so here, this is where the trend on bullish as per the daily time frame also. So here we see a rally of 108%, and then we saw some correction of 17%, another rally of 57%, another correction of around 27%, and unfolding rally of 48%. So the reason why I'm doing these measurements again and again is because I want you to realize how important timing is, how important it is to analyze the stock, plan your perfect entry, and wait for that window of opportunity to turn up before you pull the trigger, rather than buying stocks after they've rallied, because your risk reward ratio gets absolutely skewed. You incur a lot of opportunity cost, and a lot of time and energy gets wasted in that process. Let's move to Amir's request for analysis of Seed Company Limited. His average cost is 750. Again, another stock with very strong volume activity, very strong weekly chart, very strong daily chart, very strong 75-minute chart as well. And it seems like the stock is trying to give a breakout here, and it is doing so. with good volumes, but I would like the volume to hold up. So I wouldn't suggest a fresh entry right now. Instead, I would like to see the stock conclusively break out and sustain above the level of 800 rupees with strong volumes. But since you already have an active position in KSCL, I would suggest you to maintain a stop loss. Now, it's hard to give you a small stop loss. I want to tell you to maintain the stop loss of 5%, but it would be suffocating the stock, and even a small fluctuation can stop you out. So here your stop loss is going to have to be 14%, unfortunately. So 5 is where the stop loss should be, and you should continue to hold on to the stock. Now, you also want to keep an eye. Actually, you know what? Since we are testing an important resistance, you should maintain stop loss right here at 743 rupees. If the stock kind of corrects a little bit, then you can potentially attempt a re-entry near the level of 680. But for now, maintain 745 or 743 as your stop loss and wait for the stock to sustain above 800. If it does, then 1008 rupees is where your target should lie. TradingView does not recognize the symbol added by you. I think this is not supposed to be X. I think it's supposed to be just Bombay. So TradingView actually does not recognize the BSE codes. I don't know why BSE does it. It's so weird. But you're going to have to mention the stock name for me. So with that, I want to take a final look at your comments and see how I can help you out, if there's anything I can answer for you. And if not, then we can wrap up today's session. Kindly provide your links under a description in every video. That's a pretty good feedback from Mr. Bose Singh. If you go over to my YouTube channel and watch any video, you will see the description. I will also make sure to make them available under every live stream as well. That was a perfect session. I am very happy and very grateful for you all for taking the time to come and attend the live session. Thank you so much for joining me. I will see you again on Friday in the Market Outlook series, where I bring to you in-depth analysis of Nifty, Bank Nifty, and the intersector analysis. So don't miss out the session, because over there I always get forward-looking levels, which have been doing better and better every week that goes by. And we also want to know where the momentum is so that we can put our cash there. So I will see you on Friday. Until then, namaste.